In this episode, we're talking about why focusing on dividend stocks could cost you money. All right, welcome to our latest episode of Access Granted. Today we've got Craig joining us here. Craig is going to be talking to us a little bit more about the dividend trap. So, Craig, what is a dividend trap?
Yeah, so a dividend trap is basically a stock with a high dividend yield, and that generally, when you're an investor, you're looking at it, it looks juicy, it looks appealing, but the problem is that the dividend's unsustainable. So it's a trap in that when they cut the dividend, you're going to get hammered on the share price. And a good example of this was Crescent Point, which is a company that a lot of Canadian investors held. They had an unsustainable dividend. 2015, oil price crashed. They couldn't keep the dividend going. The stock price just got crushed. Went from $47 down to about $10. So you can really get hurt on those.
Yeah, I mean, this is a story that we're seeing a lot with clients, and not just clients bringing it to our attention, but also prospective clients, people that we're talking to in the community, and they're talking a lot about dividends. So why are investors preoccupied with higher yields and higher income producing investments?
Well, I think it's like a combination of a few things, but more of the investors out there are moving towards retirement. They're in their late 50s, early 60s, and they're looking for income. And they zero in, like laser-like focus on the income because they think they need that to live in their retirement. And there's certain financial planning strategies, which I'm sure you've talked about, which kind of get away from that, but that's definitely a focus of the clients. The other thing is that the dividends are, there's a mindset that the dividends are rightly the ownership of the shareholders. So the profits of the company, they pay the dividends, and the dividends, technically speaking, the earnings are the shareholders' earnings. And there's some weight to that argument because there's a lot of managements out there who have taken the corporate earnings and used it to enrich themselves or live lavishly. And a good book on that is Barbarians at the Gate, which is an old book now, but it's still a good story, and it tells the tale of Ross Johnson at RGR Nabisco, who tried to do a takeover of RGR Nabisco. He's actually a Winnipegger. He was born in Winnipeg. But that's a great story about how management used the corporate profits. I mean, he was sending his dog on the corporate jet. He wasn't even on the jet. The dog was on the jet. So if you're a shareholder, you don't like to see that.
Yeah, no, obviously not. So, as we kind of discussed here, there is a lot of people who have that laser-like focus. That's all they really care about is the dividend payment, the dividend, how much they're paying, etc. So in your opinion, how should investors think about dividends? What should they be focusing on as it relates to a dividend?
Yeah, so I mean, with us, when we look at an investment, the dividend is part of the overall picture, definitely, because it can show you that if there's a long history of consistent dividends, I mean, that can be an example of or evidence of good management. But Ben Graham, who wrote The Intelligent Investor, obviously is a big teacher of this type of stuff, and certainly somebody that we try and follow. He said that you should put the onus on management. So if they're not going to pay a dividend, the management should be able to tell you why that is. And so there's lots of examples of good companies that don't pay a dividend. Berkshire Hathaway doesn't pay a dividend, Amazon, Google. Those managements have made the conscious decision that they have better uses for the money than the shareholders will have. And for the most part, they've been proven right on that. There's also tax advantages to not paying a dividend. So that's another good reason why you might not want to pay a dividend. So that's the way you should look at it, though, is if I'm the investor and I'm looking at the management and they're telling me, oh, we have better uses for it, well, if you believe them, then you should be happy not getting your dividend. If you don't believe them, then you've got a problem with your management and maybe you shouldn't be invested in the company at all.
Right. So at the end of the day, you want the money being used in the best manner possible. So if it's management, let them spend the money and invest in the company.
Absolutely.
Versus just spitting it out to you.
Absolutely.
And if they can't do that, question the management.
Yeah, like if you don't trust your management to do the right thing by you, then you probably shouldn't be invested there at all.
Right on. Makes sense. All right, well, thanks so much for joining us on this episode. As always, feel free to visit us at www.whitehoustonwealth.com. Send us in your questions. And with that, we'll close off this episode. Stay tuned for the next one. Ready, aim, fire.